Hey everyone, Hanukkah Cease with the Stock Market Academy. Um, just want to talk about today's action real quick. We saw what looked like a follow through to the bull run the last few days, only to sell off midday. That's what I term as an intraday reversal. So here on the open, you saw that we had a rip up higher here, and then the market couldn't hold that, and then about an hour later, it just started sliding all day and plunged lower. Now, I want you to notice at the end of trading yesterday, and this is the 5 minute chart right here. You can see up here, it's the 5 minute chart. At the end of trading yesterday, we had major volume that kind of predicated what happened on the open. Same thing here. We had extremely high volume at the close. This massive volume can only be accounted for by a large seller or institution, typically an institution or a humongous trader or hedge fund of some sort, because the general public cannot dramatically influence price like that in such a short period of time, unless everyone was rushing to selling. So this just signals that there's major selling power in the market. And this is a 5 minute chart. I want to pop over to this one here. So this is here, let me show you this one. So you could see that a lot of uh, traders stepped in at the supply zone that's sitting right above this window right here. Steve Neeson, the godfather in Western world of Japanese candlesticks, refers to this as a window. In Western technical analysis, it's referred to as a gap down. And generally, right above the window or the gap tends to be a major supply zone right here. So we could see price faltered right at that resistance, which also these prior support levels acted as resistance. This was also the gap. So there was a little confluence here, and the market sold off pretty dramatically into the close. It kind of just, after it ripped higher, it kind of just went straight down. Psychological reversals are very powerful indicators, because what happens is, think about what happens if you were to buy the stock or buy the S&P yesterday at the close. You woke up and you're immediately up. You look at it before the market and it's up this much. And then in the first 15 minutes, it rises this much. And then by 10 o'clock, it rises this much. And then it falters. Then all of a sudden you're negative. Now you're underwater. So what started as a very profitable trade in a very short period of time, a very enthusiastic trade, quickly turned negative. That generally sees a lot of people step into the market and sell because they don't want to see a winning position turn into a losing position. That's why intraday reversals are always very powerful psychological indicators of a reversal in place. I just want to show you a couple other ETFs just to confirm. This is the one that follows the Dow Jones. Same thing. You can see on QQQ, it actually closed this window from right here a couple days ago. Let's drill down on that. So you could see even lower, this rip higher right here. Now there should have been, at this level, there should have been a lot of buyers, because if you were to plot this right here, right below this level, what I'm showing you right here is a demand zone. A demand zone sits below a gap higher, whereas a supply zone sits above a gap lower. So if you go back to QQQ, there was really no demand zone here. Price just fell through support, which this level here, these tops here should have acted as support, especially with this gap. This is the bottom part of a up window or a gap up. And so below here should have seen, in this pocket of trading activity, demand zone. It really wasn't there. We closed at the lows of the day. If you just run your mouse over, you could see here that the low was 28.35 and the close was so the low was 283.35 and the close was 283.54. So barely moved, closing at the lows of the day, which is very bearish for just about everything right now. Looks like the market is taking a new leg lower and should make for a good buying opportunity, potentially the bottom, which I estimate this sell-off. This was a chart I shared the other day. This sell-off happened sooner than I thought. And on the weekly chart, my target is that we hit the August 2020 highs and as well as the Fibonacci levels off the COVID lows. That means there is a lot of confluence at the 35.08 level, and based on today's price action, it looks like that is likely. That's a market update for June 28th, 2022. Thanks for watching.